Good morning, good afternoon, good day. Welcome to my weekly market roundup, 10th January 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel, and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use in my live trading, and these are the same systems I am going to use today. That was the last slide of my presentation. Let's start with a global view, starting with the Australian market index AXJO. In the weekly chart, it is bullish. In the daily, it is moving sideways. For short-term trading, we are not going to look for any buy setup in Australian market right now. Japanese market index topics. This is more bullish than the Australian market. In the weekly, it was moving in a range. Same was true for the daily chart. This week, it broke out of the range. It is possible to look for fundamentally strong stocks that are probably also breaking out to look for buying opportunities. China market index CSI 300. My sound, was it off for a while? Sorry about that. Let's go back to the Chinese market index CSI 300. Bullish in the weekly, bullish in the daily. The right time to buy would have been when the daily broke out of the watermark resistance, at which point the weekly also broke out of the watermark resistance. This Friday's candle is indecisive, therefore on Friday we would not think of taking a new position in CSI 300. UK market index FTSE. This is also bullish in the weekly, bullish in the daily. The daily broke out of the watermark resistance 3 days ago. At that point, you could look for breakout opportunities in individual stocks. I would not look for buying opportunity today because price is already up for few days and the momentum so far has reduced. The right time to buy would have been when FTSE broke out of the watermark resistance. India market Nifty 50 index. This is very bullish also. The weekly candle again turned bullish. The shape was always bullish since this time. It never turned bearish. There was an indecisive shape candle, but the color was bullish. If we combine color and shape for many weeks now, India market is bullish and probably the strongest global market. Daily is also very bullish. Certainly overbought, shown by the stretch band indicator being stretched for a large number of days and even large number of weeks. It may be difficult to buy or even find low risk buying opportunities in the India market now unless they are in industries that were weak earlier. Could there be such industries? Yes. For example, hotel industries. Because of the COVID-19 situation, India's situation is also pretty bad. But now the vaccine is going to be rolled out. So hotel industries, hotel or related industries, leisure industries may give low risk buying opportunities. Though Nifty 50 is at the very high, I don't expect the hotel industries stocks to be at such high price level. That means whatever be the market condition, using industry rotation, you may be able to find fundamentally strong stocks at a low risk buy point. Global markets are bullish, no doubt about that. All the global markets are bullish, strongly bullish, you may say so. Now let's look at the USA market. Let's look at the market ETFs, and I'm switching from Q Global to Q Elite. Starting with S&P 500 ETF SPY, bullish again. No doubt about that. Nasdaq ETF QQQ, bullish without any doubt. Dow Jones Industrial Average, like a broken record, at the right edge, as bullish as one may expect. I'll come back to Dow Jones. Let's look at IWM 1 minute. IWM also very strong. Now if we look on the right edge, at the right edge, Friday's candle, the color is still bullish for IWM. Price closed slightly lower. We know price closed lower on Friday because the activity bar is in red color. However, the color is still bullish, shape is indecisive, so we are not able to say it's a bearish day. And if I go back to DIA closed higher. However, why I came back to DIA is that we have two successive indecisive shape candles. The color is still bullish, but indecisive shape candles. When indecisive shape candles come at the very top, then there may be a reason for caution. There is no reason to be bearish. There is just a reason to be caution, but even that is only there in DIA and IWM. QQQ, SPY are bullish, and overall we have to say from market ETFs that the market is very bullish. Let's look at some market internals now. I'm going to look at market internals from many different angles. These are new enhancements I am testing out. There is some issue with fire in terms of ease of use. When I'm calculating all this, aggregating all the data using fire, I am having to do it one by one for each of the indices, each of the markets. That is not what I want to do. So I'm waiting for Metastock to fix that. Hopefully they will fix it, and then I will roll it out. By the way, I have stopped offering Q market breadth setups to new customers because it was taking considerable effort from my side to set it up. However, the few of us that are already using, I'll make sure that all of us get the updated version once the Metastock fire issue is resolved. Having said that, let's look at the enhanced versions. Let's start with the USA Composite Indices daily. Now I'm showing the Composite Indices daily market breadth setup. I will look at daily, but as I mentioned, primarily the insight whether the market is weakening or not, that insight comes from weekly, not from daily. Why am I still looking at daily? Just to make sure that the calculation was done properly. If the daily calculation was done properly, then I know the weekly is done properly also. That's the only reason I am opening the daily chart. And at the right stage, if I see that the plots are changing, all I need to see is the date. Date is 8th January. So the calculation was done. This is how once you run the aggregator program Fire, you may make sure that you ran it properly. You didn't miss anything. For example, I didn't miss the composite indices. Now that we have seen that calculation is done, let's look at composite indices weekly first. And I tend to say this is the most reliable insight we may look at to know if the market is weakening. I didn't even use the term one of the most reliable. I think this is the most reliable way to know if the market is about to roll over. Barring cases like flash crash, those are random events, but if we exclude that kind of flash crash like of activity that happens suddenly, in any normal market situation, this market breadth studies will tell us first if the market is weakening. And I'm starting with the composite indices, Nasdaq and NYSE. New high low, bullish. There is no other way to put it. Advanced decline, normal move. There is no divergence, no bearishness, and up down volume is the same. The composite indices themselves are very bullish. NYSE composite has a trend line support. Unless that is broken, we are not going to even think of taking short trades. Jump and thrust has not hit the overheated red dots yet. If we look at both the pairs, it has not hit the red dots yet. So composite indices are saying that it is bullish. And this view is in fact more powerful, more useful than looking at the market ETFs and futures to see if the market is really bullish or not. Now, composite indices are not the only market view studies we have. We now have the major indices studies. And here I am looking at not only the thrust, jump, new high low, advanced decline, up down volume, but also percentage of stocks above 50. No, this is percentage of stocks where 50-day moving average is above 200-day moving average, percentage of stocks above 50-day moving average, percentage of stocks above 200 moving average. The weakness will be shown only when these moving averages topple over and comes below these thin white lines. That has not happened, nowhere close to that. If we look at all the major indices, be it Dow Jones 30, Nasdaq 100, S&P 1500 and S&P 500, the moving average breadth indications, all three of them across these four major indices, all are bullish. All are bullish. Thrust jump, not overheated, not overheated. Here not overheated on both the indications. Only jump is overheated for S&P 1500, not thrust, and for S&P 500 again not overheated in the weekly chart. New high low, very bullish. Advanced decline, normal move, there is no bearishness, no divergence. Same is true for up down volume. Now if I look carefully at the lower charts, and I may expand them, at least expand one of them. No, inner window, maximize. You can see the up arrow. This up arrow is an accumulation day. What is meant by accumulation day in Q market risk studies? It means majority of stocks went up and those went up with major volume. So it's not just that the stocks went up, but they went up with high volume. That is what is an accumulation day in this Q market breadth studies. Accumulation days come with up arrow, distribution days would come with down arrow. Let me minimize it. Restore. If we look at the charts for all the major indices, if at all we find any arrow like here, they are all accumulation arrows. There is no distribution in any of the individual major market indices. Now let's look at Nasdaq and NYSE again. This time the whole of Nasdaq, and let's look at the weekly. We don't need to look at the daily. The daily data is there to make sure that fire aggregation was completed successfully. If we look at the Nasdaq as a whole market breadth, the moving average indications are all bullish. Jump thrust not overheated. There is no bearish divergence or weakness in the internals. That is Nasdaq. And if I look at NYSE, again the whole of the exchange, the moving average indications, looking at the weekly charts, weekly chart here, bullish. Only jump is overheated, not thrust. Internals, normal move, bullish move, no bearishness. Now I looked at the composite indices. I looked at the three major indices also. Sorry, four major indices. So total 6 studies. We have granular data on all these charts. Now if I wanted to get a total view of the market breadth, then we have a new study or insight. This is called market breadth total view, weekly and daily. Here I am plotting it using S&P 500 ETF SPY. You could plot it using QQQ or SPX, the index, or E-mini S&P 500 futures, doesn't matter. Any market instrument can be plotted. The important thing is not the candle chart itself, but the aggregate accumulation counts and aggregate distribution counts. The distribution counts come in red color, aggregate accumulation counts come in green color. And I made this statement earlier and now I am making it again. No significant market drop has ever happened without the distribution count being at least 2 or more. If we look at the right edge, there is no distribution count. If at all we find any count, those are accumulation counts. In the daily chart on the right hand side, in the last week we have 2 accumulation days. Not in all indices, but count shows 1, so at least in one index the accumulation came. There was no distribution unless the distribution day starts to come and with count of at least 2 or more, then we don't think the market, at least I don't think the market is going to topple over. Why I think so? Because it has never happened in the past. That is how to use this Q market breadth total view. Very powerful view in my view. Now if you look back, let's look at the daily chart. Let's look at the pre-COVID drop. In this area, the market was still going up. There was accumulation count 1, distribution count 1, accumulation 1, distribution 1. We still don't have to be concerned. Then came a distribution count of 2. Market was still going up. Then came another distribution count of 4. Market went up for a while after that, and then came a distribution count of 6. When the count 2 and count 4 came, we would be cautious, and when the count 6 came, distribution count 6, market dropped with a bearish shape candle, then we would probably bail out of the long positions or make sure they are hedged. Incidentally, if I change the template, I think around this point at the top, we also had bearish headwind signal, either in the weekly or daily. Let's check that out. Yes, in the weekly, there was a bearish headwind signal right at the top before the distribution count 6 came. That would be another reason we would be fully protected or hedged on our long positions. That is one way to use the distribution counts. Another way to use the distribution counts is after a sharp drop. If you see that the market has dropped sharply, then there is a large distribution count and the market doesn't go down anymore. Then you may start to look for Q long opportunities. Because market dropped just before that, those long opportunities could be more of reversal setups first, and then that may be followed by go with flow trend following setups also. Initially, I would expect the setups to be of reversal kind using Q techniques. That would be headwind or bounce or box. And then it would certainly give go with flow setups also. Again, once the market drops sharply, there is a significant distribution count. Market doesn't go down after that. That is a sign of exhaustion, and we may start to look for buying opportunities. If we look at the daily chart, this was a distribution count of 6, distribution count of 2, another few days of drop, and then an up move with accumulation count of 6. So this would be the day we would start to look for buy setups. We could find buying opportunities in individual stocks on that day itself, or we could wait for price to go up in daily chart, pull back, and see when it pulled back, it gave another distribution count of 6. But it stopped going down and reversed immediately with an accumulation count of 4. So without any doubt, this day would be the day to buy fully, invest, I think, as much as we want to. Because the risk would be very low, stop loss would be narrow on the individual stocks, and you would find a lot many fundamentally strong stocks at that point. We are never going to buy fundamentally weak stocks. We would buy fundamentally strong stocks in strong industries on this day. That is how you may use distribution accumulation count to catch the bottom and also anticipate a rollover at the top. If we apply that analysis at the right edge, there is no sign of distribution. And by the way, whenever you look at a count, here also there was a strong distribution day with count of 5, and after that price didn't go down. It had an accumulation count of 1, then accumulation count of 3. even from the accumulation count one day, we could start to look for buying opportunities. If a large distribution count is not followed by price drop, then we may look for buying opportunities, considering that the distribution day was a sign of exhaustion. And if we wanted to know the count 5 came from where, we may look down at the band indicators, and I have mentioned it here from top to bottom. So this count 5 came for Nasdaq as a whole, NYSE, not S&P 1500 but S&P 500, Nasdaq 100 and Dow Jones. Only S&P 1500 didn't have a distribution day on that day. So when we study that and we see that the price moved up, we could start to look for buying which kind of stocks? Small cap stocks. Because S&P 1500 didn't have a distribution day. All the other major indices had distribution day on this day, showing that S&P 1500 was relatively stronger. That was a more broad index. So on this day, you could of course look for buying opportunities in any stock, any liquid stock, but you could also look specifically into small cap stocks because of the insight we get from the individual band dots showing accumulation distribution. That is how this market breadth total view can be used. Extremely useful in my view. We may look at the individual charts, but everything is combined together in this single chart, weekly daily view. And I hope to roll it out to all the existing Q market breadth users soon. I have to get something fixed from Metastock first on the fire side, but this is very useful, and this is not showing any distribution day again at the right edge. Oops, what did I do? Not showing any distribution at the right edge. Therefore, I am not going to be bearish. And lastly, if I look at the mega cap top 20, it is still supported by trendline support in weekly and daily, range bound, underperforming the market but not bearish, moving sideways. So there is no weakness in terms of market internals, composite index and the market ETFs. If we look at QH, sector industry stock breadth, on Friday it was not so strong. On Friday I'm trying to draw something. Never mind. On Friday, this 1 day period is showing more red portion than green portion. So 1 day part is showing that it was not so strong on Friday. However, if we look from one month period at the right edge to 10 day to 5 day to 2 day, everything is bullish. We saw that IWM and DIA, only these two indices, the Friday's candles are not so bullish. All the other market ETFs are bullish, but those two are not bullish, and we see under the hood there is weakness in the sectors industry stocks. So our conclusion is that the mega caps held the other ETFs on Friday. Now, though the non-mega caps dropped, the sector advance declines, industry and stock advance not so bearish. It is bearish but not massively bearish. So overall we have to say the QH is also bullish for the week. Friday there is some weakness, but that is the only weakness probably we can see, because if I go to Finder, look at the weekly chart, all signals, strength signals, continuation and even reversal signals, everything is bullish. If I look at the daily interval, that is Friday, it's not as bearish as we saw from the Q edge advanced decline studies. So Q Finder is also not showing bearishness. We have to say it is bullish. in this market, we may look for only buying opportunities, not shorting opportunities. And I know many experts, and they are very well known, and for a good reason. They are well known, they are very knowledgeable in their own respective studies on the market. They are bearish, but they are bearish not today, not last week, not last month. For long time they are bearish because they are expecting the market to come down, and for good reasons again. However, they are being proven wrong week after week, month after month, be it in terms of Tesla or be it in terms of the whole market. Now there are two ways of trading: anticipate a move and keep that in mind, but that, in my view, influences our decision making. We are not able to take long trades, and if we take, we exit the trades quickly. We may be wrong for a long time if we follow that approach, and eventually someday, of course, they are going to be right. Someday market is certainly going to pull back. Someday they will be right, but they will be right after a large number of times being wrong. That is not the way to make money. The way to make money is look at what the market is doing based on robust data, not my judgment. And I looked at the market from global market angle, USA market ETFs. You could look at market futures or indices also. They are bullish. Composite indices, mega cap top 20, not bearish, sideways. Market internals, very bullish. Market breadth total view, bullish also. No distribution. QH overall bullish. Q finder bullish. So we cannot think of being bearish. Now the question is, will the market drop someday? Yes, it will drop. And I am pretty confident using the same Q systems, I will be probably, and you will also, come to know before anybody else, or at least at the same time that anybody else comes to know that price is now falling, market is rolling over. I can almost guarantee that you will come to know using Q systems at least on the day others come to know, or maybe one day before that. You will not be behind others. And if that is the case, why I have to anticipate a down move when there is no signal at all? That I don't want to do, and that is why all the trade ideas that I shared recently are mostly on the long side. And if you have noticed on the forum or on Twitter, they have done extremely well for short-term trading. Let's look at some of them. And I will not pick and choose, that's not my style. Let's look at the first one first. Xylene, this I shared 5 days ago. Let's look at the snapshots I shared. At that time, the industry biotech, its performance was improving. That was shown in the score going up. As of the day I shared it, biotech was down, but the score was going up. So relative to other industries, it was accelerating. That was a reason for me to consider buying. And I found the stock Gild, Gild, excellent valuation with earnings growth and revenue growth, great earnings quality, with even a dividend of 4.6% at that time. Of course, it's a money making company, so the fundamental allowed me to buy without any doubt. And I looked at the chart. In fact, I shared the stock on this day in a market roundup, I think, in another YouTube live webinar, and that was before the USA Georgia Senate race. And I remember I specifically mentioned several possible buying opportunities and told that because of the Senate race, I was not going to buy them except Gilead. I mentioned specifically that Gilead was a stock I would not mind buying in spite of having the Senate race nearby. That was because of the industry strength, the fact that it was a biotech stock, well-known stock. It gave an excellent Q setup, and fundamentals were strong. That was then. I in fact shared it on this day. I knew about the memory resistance next one. Still I mentioned I would buy, and I did buy. And let's look at Gilead today. I first talked about it on this day. I bought it at that time, and it has almost gone up in straight line. All the traffic light candle colors are bullish. 1, 2, 3, 4, 5, 6 days in a row. If I always thought the market is going to come down, it's like Obelix. I think all of us know about Obelix, Asterix and Obelix, that the sky is going to fall on our head. Of course, the sky doesn't fall, market may drop, but I don't have to worry about sky falling on my head or market is going to drop like that, because when it drops, you will come to know using Q systems before anybody else, probably before or at least on the same day. So now what to do? I bought in the stock on this day or next day at the open. It has gone up. It has given me much more profit than the risk amount. Would I hold on to the stock full position at the end of Friday? I wouldn't. Why? Because the last 2 days have upper tails. And if I look at the intraday chart, this is Thursday, had a nice rally, little bit pullback. That was not a reason for concern. On Friday, it stalled. It could not go above early range high. The early range low and high pivots were drawn automatically in this Q fine-tune chart after the market opened. Then throughout the day, price could not go above early range high, though the market ETFs, especially SPY and QQQ, rallied in the second half. This stock couldn't. Looking at that and the fact that more than risk distance was covered easily, I would have booked profit, at least partial profit, and applied trailing stop to make sure the trade as a whole is profitable. Quite a lot profitable, in fact. This was not the only stock that I discussed recently. Okay, let's look at few others. Regeneron. Okay, let's look at this. This was another biotech. I first shared it 3 days ago. And how did the analysis look like? Biotech was strong with acceleration when I shared it. That was 7th Jan. Again, a stock with excellent valuation, earnings quality, and in this case, 3 quarterly earnings growth positive, 3 yearly earnings growth positive, 3 quarterly revenue growth positive, 3 yearly revenue growth positive. Very strong in itself. Fundamentally, it was a no-brainer. I could buy, and Q chart showed that it had support in weekly chart. That is very important. These memory trend lines work very well, and this is a trend line coming from far away. Price stopped right at that point, at which point the daily displayed a bullish headwind that created watermark support that was never breached. It created a false breakout at the watermark that is a powerful bullish signal. And if you look closely, let me draw again, clear all the drawings. See, on this day, one day before I shared the idea, it had a down day with very high volume shown by the dot on the activity bar. And right next day, it reversed with a bull release signal that showed that this watermark, which was also the approximate area of the weekly trend line and the weekly watermark, those were having good support. Was there a perfect Q trade setup? No. I mentioned in the post that the setup would come if price could break out of the trend line resistance. However, looking at the strong fundamental of the stock, the industry strength, and the weekly memory support, which is always our friend for buying, weekly memory support, always our friend for buying, I took an early position using call options. And I followed up later. Sometimes I take a call option, naked call option, when I see that the likelihood of going up is higher and the stop loss is close by. And see what happened next day. I took an early position on this day when I shared the idea initially using call option. I used a call option that is expiring on February 21. That was after the earnings date. So I was expecting to book at least partial profit before earnings, so much so that I could hold remaining lots at no risk. So I could have gotten my money back if stock went up significantly. The day after I entered my call option, price went up, and in this single day I had profit of more than 48%. Now I have a thumb rule that I have shared earlier. If in one day the entry day or the next day a simple call or put option reaches 50 to 100% profit, I always like to book some profit, because it is not going to happen every day that I take a call option and it hits 45, 50% or even 100% profit in one day or same day. It doesn't happen usually. So when such an unusual thing happens, I don't want to let the profit erode. So I booked partial profit already in Regenerate. Now when I shared this post, I shared the daily chart, my profit in the call option, and I also showed that in the fine-tune chart, 10-minute interval, just like Xylene. This is Friday's chart, not at market close, before market close. Friday's chart price was not able to go above the early range high. That was another reason I thought of booking profit. Now let's look at Xylene at the end of the day. Not Xylene, sorry. Let's look at regeneration. Regeneron. Regeneration. Look at Regeneron at the end of the day. Now it has confirmed a breakout trade setup at the end of the day on Friday. And see the weekly chart. Very beautiful bullish candle, bullish backdrop color, long lower tail, hollow body, right at trend line support. So as of Friday, it has given a valid breakout setup with high bullish pressure. Now how could we buy it? Of course I took an early position, but that is because I am following this stock for a while. And I also listen to Dr. Jeffrey regularly. He is a doctor. He knows about biotechs. I think I will never know about biotechs as much or even close to him in my whole life. So he already mentioned about Regeneron, and I was looking for a good Q entry point. And when Thursday came, I took an early position, and Q analysis 360 degrees angle was showing it was a strong stock. I took an early position, but if I didn't do that on Friday, there is a confirmed Q breakout trade setup in Regeneron. How to buy it? Of course, we could buy it using stock. Let's look at its earnings date. I think some distance away. I shared in the Q Vital post 4th February, and today is 10th January, so it is more than 1 month away. Or not more than, little bit less than 1 month away. That is good enough to take the position using stocks. Now one gentleman mentioned that he was considering or might have taken it using vertical, and I wanted to mention one thing in this webinar. I remembered what he told me, that he was thinking of taking it using vertical. Vertical may not be the best choice for this stock when we look at the volatility. Let's look at Regeneron, and that is why I didn't choose vertical for this stock. One reason I took simple call, if I am not mistaken, is because the volatility was not favoring taking a vertical. Am I correct? Yes, I am correct. Yes. So this is a chain, option chain of Regeneron. I am choosing an expiry that is after the earnings. If I am using a vertical, then long call vertical would be buy the 500 or maybe even buy the 490 strike, one of them. Let's choose one of them. Let's choose 495 strike, buy it at 29 and go out of the money, see where we get premium half of that. To 29, half of that is about 14.5. So we are going to sell 520. Buy 495 call, sell 520 call, expiring after earnings. Now if we look at the volatility, we are going to then buy volatility, not that column. Here, buy 38%, 38.5% implied volatility and sell 520. Sell 35. Buy 38 volatility, sell 35 volatility. That's not what I call an efficient choice. If I want to take vertical, I want to make sure that my strike that I'm buying has less volatility. I am selling higher volatility. In this case, that is not true. If I buy 495, I get 26.3. Sorry. If I buy 495, I pay $29.2. I go down, choose the strike that is half of that. So let's say 14.5, 520 strike, but the volatilities are not skewed in favor of me. I am buying higher volatility, selling lower volatility. Volatility is not skewed in favor of me. That is why in such a case, I would not consider taking a vertical. Not that it cannot make profit, but it's just it has to work harder, go up the hill. I don't like that. That is one reason I took the simple call options, and that worked out quite well. I have already booked some profit. And remember, if you took 3 lots and you closed 2 at 50% profit, the remaining 1 lot is free for you, so you don't have to worry. So if you took 30 lots and you closed 20 lots within 1 day with 50% profit, the last lot is totally free for you. If it goes up, it has huge upside potential. Why I say that? Because the expected move for this period is 61, maybe to the upside, maybe to the downside, but if it goes another 61 points, the profit will be large. In any case, I could make the trade risk-free, and I wanted to come to the option chain to explain why I would not trade using vertical in this case. I wouldn't do, doesn't mean others cannot do, but I wouldn't do. That was a regenerant trade I shared. 2 examples, both of them were bullish, and I didn't worry about other people thinking why market should come down. AXL, that is another bullish trade again, not closed yet. I'm not going to look at that. This stock, that was I think a while ago. Let's look at that. The last one I'm going to look at it. This is an interesting case. This was Micron, and I shared on November 16. By the way, I had a session with Metastock on Friday, and one gentleman asked how was the success rate of the trades I share, meaning anybody could take using Q systems, and I replied that he could look at the forum posts and find out for himself. And when you do that, you start to see that the success rate is actually quite high. And if I could do that, you could probably do that better, because many of you, if not all of you, most of you are in the USA time zone. You don't have to stay up at night to find the best opportunities. So you would probably be doing even better than me. So this is Micron. 1 month ago I shared it, and I'm following several other traders videos. They are bullish since then, well from before November 16th, and I shared again bullish idea on Micron. Why it is interesting is because usually I don't share breakout ideas, and I don't take that also, but look at Micron. The industry was going up, the relative score jumped, showing it was relatively accelerating. Excellent valuation with great earnings growth and some revenue growth also. It was only 5% below 52-week high. So this was already at a high price point. Still, I shared the buying idea. Not only was it close to 52-week high, it broke out of trendline resistance in weekly daily at price extreme high in both weekly daily. Usually I don't share or trade those stocks, but I also mentioned that if you find a stock at a high price level, pendulum high, price extreme high, or 52-week high, and breaking out, and Q Vital is still showing it as undervalued, then that breakout is much more reliable. If Q Vital is showing it as undervalued, and usually those stocks will have growth. If it is breaking out from pendulum high, it will usually be a growth stock like Micron, and it was also undervalued. Those breakouts are reliable. So this is what I shared on November 16. November 16, and let's look at Micron now. From November 16, which would be this point, to the high, it went to 36%. Now, I also followed up on Micron just before Friday, and you will find something, I think you may find it interesting how I followed up. Not that I always follow up right on the day, or I don't always follow up on the post, but 3 days ago, that was Jan 7th. I looked at Micron at that time, and remember I saw Xylid together with you just a while ago, and I mentioned there were a series of candles at the right edge with upper tail. So I saw the same thing happening in Micron, a series of candles with upper tail at the right edge. It already had a large profit. Another thing was that its earnings was coming. So if I was still holding partial position, I would never consider holding the stock position, at least through the earnings, because there were series of candles with upper tail, earnings was nearby. I had very large profit. I would not like to erode it with a stock position. If it was an options play, like using call options I mentioned in the case of Regeneron, then I could book profit on partial position, get my money back and hold on to some lots. But using stocks I wouldn't. So I shared it. This was on which day? That it may be time to book profit. 3 days ago, 7th Jan. That was right on the day, I think, before earnings. I think earnings was on this day. Let's check it out. When was earnings? Usually I shared the 7th Jan. So I think the earnings was after market close on 7th Jan. Very next day, that is Monday or Friday 8th Jan. Very next day, 8th Jan, it gapped up at the open but sharply closed lower. Now looking at it, it is not looking so bullish. Is it looking bearish? No. Why I say no bearish? Meaning there is no Q short trade setup. In any case, I could share the buying idea right at the point of breakout, and I could also mention about booking profit right at the top before it gave a extreme high volume bearish pressure, bear release, reversal candle at pendulum high. That was well timed, isn't it? If you follow the ideas, many ideas in recent periods were all bullish ideas and they worked quite well. So I didn't worry about the sky falling on my head or the market pulling over. When it pulls over, I'll come to know, you will come to know using Q systems. Having said that, let's take a step back. The global markets are bullish. USA market ETFs futures indices are bullish. QH is bullish. QFinder is bullish. Market internals are bullish. Market breadth total view is bullish. Everything is bullish. Even mega caps are not bearish, sideways. Then I thought, let's look at buying opportunities. And interestingly, today it was difficult to find a good buy setup. And when that happens, that is a way of Q systems telling that be careful. When everything is bullish but there is no Q 360-degree setup, it may be time to pause. Certainly time to pause in my view. Because in a bullish market such as this, I would expect many Q setups, but that didn't come. And let's look at them. I'm going to Q Vital, starting with fundamental first, doing a fundamental analysis on all the liquid stocks that I have, that is more than 2,500 stocks. It's retrieving data and calculating the scorecard. Let's give it a few seconds. I usually don't like to prepare the data and show you. We do it using live systems so that you know exactly how to use them on your computers using live system. I am not making up something beforehand, only showing that, and you know that already by now. So the scorecard is complete. Let's look at the stocks. I am not going to even click the 3-star button. I'm going to click 1-star button. A little bit loose criteria and see all the stocks that went up by, let's scroll down, scroll down, scroll down. Many stocks went up, by the way, with 1-star criteria. That shows the market was bullish. So I'm going to go down and select all the stocks that went up by at least 1% and look up the stocks in Q Finder for technical signal or setup. And these are the stocks. Let's look at them one by one. I see no headwind signal. Okay. There are two bounce setups, possible bounce setup. Let's look at them first. This is a bounce from trendline support, QDEL. However, there is a trendline resistance. So right now I will not buy. As of Friday's close, no setup. INVRO bounced up from trendline support as we expected, coming from the finder, but it has an upper tail. So as of Friday's close, I wouldn't buy. So breakout, I didn't find any setup. Let's go back to finder, delete these two stocks. Sorry, bounce, didn't find any setup. Headwind, there was none. Let's look for now breakouts and first focus on those breaking out with pressure. These few, let's open them. And probably Regeneron will come here. We already saw Regeneron is one of those stocks. This is STNG. This may be a breakout candidate, though there is an upper tail that will prevent me buying on Friday at the close. I know there is a watermark resistance here, but if it breaks out of trendline resistance, usually it tends to go up a little bit at least. Beyond the watermark, probably it may pause at the white direction line or even go above that. In any case, looking at the upper tail at Friday's close, I'm not going to buy. So let's see which stocks we can find that we could buy at Friday's close. This would not be so because of the upper tail. Close this. Sohu, SOHU also has an upper tail. Otherwise, it was a possible breakout, but let's close that. MELI has a trendline resistance. Cannot buy right now. Close that. NSA, National Storage, has a trendline resistance. Close that. Regeneron. I expected this to come because we already saw Regeneron confirmed a breakout setup with bullish pressure. So Regeneron has a valid buy setup as of Friday's close. This also has a valid buy setup. However, you may think that the stop loss is a bit far away. This is ATHM. Let's keep this in mind. NRG, breakout, but already high in the price move. Close that. ATHM. We are only left with one stock other than Regeneron. ATHM, let's look at it using weekly, daily. Weekly is also bullish, daily is also bullish. Now we want to check its industry. ATHM industry is interactive media and services. The industry is also strong. So ATHM gave a possible 360 degrees buy setup, though the stop is little bit far. That's fine. I am going to keep ATHM in my mind. ATHM Chilid. Okay. Regeneron, I already know it gave a buy setup. So ATHM. As you can see from Q Elite also, the stop loss for my preference is a bit far away. And if we go back to Regeneron, here the stop loss would be, because of the gap up day, would be just below Friday's low. That is a narrow stop, and in this case weekly has a trend line support. Let's go back to ATHM again to see the difference. In Regeneron, the stop is narrow, weekly has excellent support, weekly shape color bullish, and if I go to ATHM, weekly support is there, but we are already far above that support. We could use the weekly support to buy probably on Thursday, but Thursday's candle shape was not bullish. We could probably buy on this day. Looking back on Friday, it is giving a breakout with pressure, but stop is far away for my liking. And when that is the case, no second guessing, I am going to choose only the best trades. That's the way to make money, not to choose loose trades following my own criteria. So I'm going to delete ATHM. That means in terms of breakout, we didn't find trades. Okay, let's delete the breakouts. Let's look at go with flow setup. And there are many, 132. That's a lot. Let's check go with flow with bullish pressure. Still a lot, but no harm looking at them. 16. Sorry, I should close the stocks first. Okay, let me do one thing. For these 16 stocks, I'm going to use Sonar Q Elite's radar. Let's look at them, and you can see many of them moved by very large percentage on Friday. Let's see if we have a low risk buy setup starting with NEWR. No low risk buy setup at all. Plus there is an upper tail on Friday. By the way, on Q Elite, the way I have set up trade station, you are able to see the symbol from here. So I'm not going to mention the symbol every time, so we can go through it quickly. Baidu. Bullish, but bullish flow also. That's what we selected on from Finder. However, it is too extended. So I'm not going to consider that. Next one, CATM. Again, it has an upper tail, so I'm not going to consider buying it now. By the way, you may look from radar here that many of them moved with large percentage. Does it mean we have a trade setup? Probably no. EXPI, the bullish flow is there. However, the weekly is not matching the required condition for go with flow setup. So I'm not going to take it. I'm going to look for only Q trade setups. ACIA long upper tail, not able to buy that. Pen has a bullish flow. Weekly is also bullish. But if we consider stop is below the trend line support, target is near upper boundary or watermark, then the reward risk is not appropriate, not suitable for me. So I skip that. Grab, bullish, but stop loss would be far away, not going to buy it. OEC indecisive shape candle, not going to buy it. CHGG already above upper boundary, stop would be far away, not going to buy it. Infosys, Infi, very strong, isn't it? India market was very strong. This is an ADR from India, but too extended above upper boundary, not going to buy it. EDU, EDU, bullish flow but too close to upper boundary near watermark resistance, not going to buy it. MODN, bullish flow but near daily and weekly memory resistance, no buy setup. AWK, weekly has very nice support, bullish shape, and though the stop may be a little bit far away, I am stopping here because this is in utilities, and though the market was not strong on Friday, utilities outperformed. Utilities was weak for a long time. By the way, looking back after the bearish event, it didn't go down much. And this is the first bullish flow candle with a bullish shape, I think, after the bullish headwind. There were few other bullish flows, but the shape was not bullish. This is the first bullish flow candle after the bullish headwind that also has a bullish shape. So I'm adding AWK to my list. AWK. And let's look at last three stocks. VICI, upper tail in daily, weekly is magenta, bearish, so no trade. PHG, at the upper boundary, extended, no trade setup. And last one, PEG, inside a triangle and weekly backdrop color is bearish. So we looked at possible trade setups using headwind, breakout, bounce. Headwind there was none, but we looked at the setups headwind, bounce, breakout, and go with flow with pressure. We didn't really find any trade other than Regeneron, which is a biotech, strong fundamental, you may say defensive sector. Though biotechs can be high growth also, but Regeneron is at a lower price point, great valuation, and we found AWK. Let's look at AWK's industry now. Water utilities. Check out the industry. Very strong industry on Friday with acceleration, and I think the sector would show the same thing. Strong sector with acceleration also on Friday. However, for trading, I am not going to rely on sector. I'm going to only look at the industry because the sector averages out many industries and may lead me to miss many trading opportunities. The industry is very strong. So I found only two trade setups really after all this analysis on a very bullish week and bullish day, Friday. One is Regeneron that I anticipated earlier, and only one AWK. That is a way of Q systems telling that don't buy now. Now I have another stock here, another biotech, AbbVie, ABBV. And I wanted to discuss this stock a little bit. The Q technique is like Mercedes' motto, Mercedes-Benz motto, only the best or nothing else. So either we look for the best setup, that means 360-degree setup with low risk like Regeneron, like AWK, but not like Baidu and not like AbbVie also, ABBV. Why? Because the weekly is still yellow. It broke out of trendline resistance, but there is no bullish pressure, no high volume. The breakout is not so decisive. This is different from Regeneron. Regeneron, the breakout is decisive at a lower price point, pendulum middle with bullish pressure, and weekly has an excellent support. Weekly color is bullish. Again, go back to ABBV. This has a breakout, but no bullish pressure, no high volume. Breakout is not so decisive. Weekly is not bullish color. So in Q systems like Mercedes-Benz Motor, we only choose the best or nothing else. So that doesn't allow me to buy AbbVie. Now, if I look at AbbVie's fundamental, why I kept it is that let's look at, give me a few more minutes. I know we just crossed 1 hour 10 minutes ago. That is because I spent more time on the market breadth studies, but allow me 5 more minutes probably. ABBV.K. I will explain a few things and I will look at options also. AbbVie, biotech industry may be okay to buy now. And let's look at the fundamental. You will find this also very strong, like Xylid, like Regeneron. Very strong, isn't it? In one glance, you know that. Excellent valuation, earnings quality, 3-quarter successive earnings growth, 3-year as well, and revenue growth also. Looking very similar to Regeneron, but at very different price levels. Also pays a decent dividend, 4.8%, certainly makes money. Now, if I at all wanted to trade it and I don't want, then I wouldn't try to trade it with stock. Could I take a low risk option? Let's see if the skew is in favor of taking a vertical. By the way, I want to tell upfront, only choose the best or nothing else. So I'm not going to trade AbbVie. But let's explore something on the option chain to illustrate some option trading ideas, spread trading ideas. ABBV. I didn't look at the earnings date. Let's go to 40 days to expiry. This try. If I am going to do a vertical using call, then I may buy 105 strike. I'm going to pay 470. So I look back out of the money where I can get half of that credit. That is the very next strike. So I have to buy 105 call, sell 110 call. And now let's look at the volatility. I am buying 21, selling 22. That is fine. So it is possible to do a vertical in this case when I am buying lower volatility, selling higher volatility. Now, of course, now the market is closed. So the spread is 430 bid, 470 ask. During market hours, it may be narrower. So this is okay. The spread in off market hours looks okay to trade during market hours. Let's create a vertical. Buy one call, sell another one call further out of the money and analyze it. The maximum profit in this case is 270 and maximum loss is 206. So it has better than 1:1 reward risk ratio. Of course, the maximum profit and or maximum loss will be realized only at expiry. When we trade verticals, we don't expect to hold the stock, especially on the profit side, till expiry. That may be risky. I am expecting to get or take profit at half the duration. That is this line, or 3/4 of the duration, which is still far below the maximum profit. So if I look at that, look at the 3/4 period, the profit potential is $128, not $270. That would come at expiry. 128 at 3/4 of the time after that has passed. And if I look at the loss side, after 3/4 of the time has passed, the loss will be 98. So in both cases the reward risk ratio is acceptable. So in this case, unlike in Regeneron, the vertical is a feasible option strategy because the volatility is skewed in our favor. That's the point I wanted to explain using the options P&L graph for the stock. However, again coming back, I am not going to consider buying FV because in Q systems you only buy the best or nothing else. And following that, I found two stocks. Regeneron, I already shared earlier. AWK, I found during today's live session. Not a lot, and that is causing me to pause buying. I'm not going to buy any stock. AWK is different. It is an utilities. It may go up if the market comes down. It's a defensive sector, very much defensive sector. So AWK is different, but other stocks I may not consider buy. Thank you for giving me some extra time. I hope that was worth it. And I hope you liked my market breadth total view. I have to show it one more time. I spent a lot of effort to come up with this one. This single chart is going to tell you, me, everybody whether there is a sign that market is going to topple over from the distribution count and whether market is reversing from accumulation count. Thank you again for giving me the extra time. I look forward to seeing you in our next session that I hope to have on Wednesday 8 a.m. Eastern Standard Time. Have a great weekend and trade profitably. Thank you.